Oh, excellent. So, Piper Moretti, let's talk about a little bit about your story and your focus for everyone getting to know you for the first time.
All right. Well, it started about 5.5 years ago, at the end of 2016. Gosh, can't believe it's been that long. When a random buyer found me online and said that they wanted to look at houses in Manhattan Beach, where I'm from. And we were looking about the $3 million point, and we found one. And he said, "Oh, by the way, I'm going to buy this in Bitcoin." And I said, "Okay, let's do that." And I had I'd heard of it, but that's the extent. And I didn't know anything about it. And I did some research. There was only another one transaction done in Tahoe a year prior to that. So we really had to put the puzzle pieces together and figure this out. And we did. It was no small task, but we managed to buy a $3 million house in Manhattan Beach with Bitcoin. We closed that at the beginning of 2017. My buyer was very happy and went on to buy some investment properties. I think we did 3 more after that. So we did 4 total. Word started getting around that we were making this happen, and a tech guy who lived in Santa Barbara County found out about it and also bought a $2 million property in Santa Barbara County that I had facilitated. And that all happened. That was about a year's time went by. Closed the last one in 2018, and then the winter happened. The Bitcoin went up to 20 grand, and then it crashed to 3,000. Didn't do a lot for a couple of years. Kind of stayed in the game. We still had the infrastructure, but not a lot was happening. And then cut to the end of 2020. Where there was a huge run up, mass adoption, major financial institutions are hopping on board, and then all of a sudden it's from, it's like 5,000-6,000, it runs up to 14, 15, and then the rest is history. And 2021 was the biggest year yet. And then my phone just started ringing off the hook after that. It was buyers and sellers and agents who were having buyers and sellers call them, and they had no idea how to make these transactions happen. And so a lot of my business is education now, speaking like this, and educating buyers and sellers as well, because all of a sudden these buyers, even though we're kind of in a bear market right now, have we hit the bottom? I'm not sure, but they're still up. There's still a lot of money out there that's floating around, and they want to put it in a stable asset. So I help them do that. So here we are. It's middle of 20, almost 3/4 of the way done with 2022. We're about 23,000, I think. We haven't quite. I don't know if this is the bottom or not. Well, I hope it's not, but it seems to kind of be stabilizing right now, and it's not going away. We know that. So it's been a heck of a ride.
So pause on that thought. We'll talk about those details on the marketplace. But before we go there, Dan, why don't you introduce yourself and a little bit about your story and your focus?
Sure, I'm Dan. Thanks for having me. So I'm coming off the back of a sort of 25-year career in traditional asset management, private wealth management, and mutual funds. Worked at places like Barclays and BlackRock. I worked on the iShares ETFs. About 2 years ago, I was on a bit of a career break, and one of my mentors called and said, "You should talk to these guys in Lafayette. They're doing a crypto startup, and they're going to do an asset manager, and they're going to do derivatives," which was sort of right in my space of non-traditional assets that most people don't know how to deal with, and also a heavily regulated space. So for the last 2 years, we've built a exclusively crypto-focused asset manager out of Point Richmond. We've got an active Bitcoin strategy and a passive Bitcoin strategy. We're in the process of launching a crypto index fund, which is designed for use in variable annuity products, which we hopefully will get out in the fourth quarter. And we went through the registration process, and we're a member of the National Futures Association, so we're a regulated entity. The NFA would like me to remind you that I am subject to their oversight and their examinations, but they have no oversight over any crypto markets, any crypto tokens, or any crypto counterparties. So that's my required disclaimer.
Amazing, Dan. It's so good to have you here because a lot has changed in crypto in the last 90, 120 days. Sure. So can you take us through what happened, maybe an analysis of why or the why behind it, if that much as you can do there, and where you think we're at right now?
Sure, you said I had 3 minutes to do this? Yeah. Well, I think to the real estate people in the room, I think it's we've all felt what happens when credit dries up, right? And so there was about sort of middle of last year, in the middle of the big decentralized finance summer, there was a roughly $20 billion bet placed on the successful completion of a software upgrade, right? If you've watched people try to upgrade software on websites, or remember healthcare.gov, like large scale projects, trying to bet on successful completion is one thing. Well, we had people that came in and bet on not only successful completion, but completion by a certain date. And so we're now sort of 10 months late on that for the most conservative, right? And so we had people who placed several $1 billion of a bet that it's called the Ethereum merge, that the completion of that software upgrade would happen sometime between November and December of last year, and that they would then have their assets back that they could use for other purposes, like paying back all the loans that they had taken. When that didn't happen on time, those people went and borrowed money in ways that were not transparent to the rest of the market. And so we got a surprise when one of the larger counterparties was unable to pay. And then that cascaded through to other counterparties. So we had a lot of forced sales and a lot of forced liquidations. So there's a lot of selling pressure in the market. There was also the general repricing of risk, the Federal Reserve coming in and taking risk-free rates from 25 basis points to 300, as well as all the macro shocks, the horrible things that are happening in Ukraine, right? We've got Taiwan, we've got European energy shocks hitting this winter, all of those things. So a combination of a repricing of risk assets. I've gone over my time, but I think the takeaway is where we are now is that the markets continue to function all the way down, right? I, as an investor, get really scared when there's no one buying at any price. And that's not what we experienced. We saw markets continue to function at reasonably good spreads and transaction costs all the way down. The second thing is that the markets are, and I know you talked about, we don't know if we're down at the bottom yet, and I don't know either. But if we look at across Bitcoin and Ethereum, which are most of the market, the ratio of the current market value to realized value, which is basically cost basis, is right about 1, and that's historically been a level of some support for the markets. So people are back down to their cost basis or back up to their cost basis. And finally, we have certainty on the Ethereum merge, which is now happening in September, and that gives us some way to predict when that additional capital is going to unlock and become available to the rest of the market.
Wow, so much there, and my brain's got to take a few minutes to digest it. But you said it so well, and it makes a lot of sense on those bigger pieces. Piper, being that you're a real estate professional and expert, and then now connecting these two dots from cryptocurrency to real estate and trying to help people transact and do deals. What are you seeing or feeling that the marketplace with crypto and real estate? What are your thoughts in the next 3 to 6 months if these things do happen and things get a little more normalized?
Yeah.
What are your thoughts on that?
Well, it's kind of runs along the line of what is the traditional real estate market doing? I'm seeing it's kind of the opposite right now. Right now, I'm in LA. I'm sure it's the same up here. We're still in a seller's market, but on the crypto side, since it's down, it's the sellers want those buyers. There's a lot more sellers out there right now than buyers at the moment. So yeah, I mean, and the sellers that I have right now are, they're bullish on crypto. They either want to take the crypto, or they have a funky property that may not be selling in the traditional markets, and they want to open it up to these types of investors. It's going to take a while, and they're totally fine with that. But at least it's out there in the world, and these crypto investors are kind of looking and kind of trying to play the game of, all right, well, when it goes up to a certain level, that's when I'm going to buy. I do have clients in LA that want to move to Texas. We were talking about that earlier. But it's got to hit, Bitcoin has got to hit a certain level before they want to make the move. So it's kind of like a waiting game on that end.
Now, we did our kind of interview beforehand earlier today, which is also going to be found on YouTube, Piper's whole story. You talked about this really kind of 3 ways to transact with crypto into real estate. Could you break those down real fast for us?
Yeah, sure. Real quick, there is a wallet-to-wallet component. That's a little bit more rare now because, like I said, not a lot of sellers are going to want to take crypto unless they're really savvy crypto investors. I would not even advise a seller to, if they don't know what they're doing, do not do that. But we do have the capability to do that now. And the second option, which is the most popular, is the crypto to cash conversion. We in Southern California, our escrow and title are separate. So I have a couple of escrow companies that are set up with these payment processors. They can do it, no problem. And then the third option is leveraging, doing the collateralized loan option. And those are becoming a lot easier as well.
Excellent. So Dan, talking about leveraging, shifting, part of what happened was you mentioned in the first part of the discussion was people started to borrow, right? And so talk about what happened specifically with over leveraging and these folks not be able to pay it back, and what that means long term or even short term for the cryptocurrency investors' confidence in investing there.
Sure. I think that there are a number of there's a large portion of the market that approached the crypto market and said, wow, these people are getting large amounts of leverage on very volatile asset. And how do we get comfortable with investing in a market where you've got sort of 85, 100% annual volatility, but people are getting 20 to 1 leverage, not on US exchanges, but overseas. And for a long time, the founding principles of the market were complete transparency as to where the leverage was. You couldn't see who it was, but you could see the pockets and where they were sitting. And that there was an automated way to liquidate collateral. So if the price came down on those loans, you could go sell the crypto collateral that had been posted to start paying down the debt. So deleveraging would happen in a fairly orderly fashion. And when we've seen large sell-offs in Bitcoin, that's largely been attributed to those automated liquidation programs. What happened was you had people like Three Arrows Capital, like Genesis, other large players in the market who were negotiating off-market private deals. And so they were doing traditional old school loan contracts, backed by Bitcoin mining equipment in some cases, but they were backed by all these crypto-related assets, and those were not disclosed to the market. So there were large pockets of hidden leverage or leverage that was not transparent to the market. And so you ended up very similar to what we saw in 2008, where AIG ended up as central counterparty to the whole market, or not the whole market, but a large portion of it. You have this small group of people who ended up very exposed to the market, very levered, and not able to provide collateral to liquidate. Now, normally in a crypto scenario, it doesn't matter because the smart contract, the computer sells the collateral. So if you don't answer the phone, it doesn't matter. But we got into a situation with these private contracts that they could just not answer the phone for 5 days. And the collateral continued to erode and erode and erode and erode until people started filing for bankruptcy. And then we had a completely different problem, and that's going to take years to work out.
So let's talk about how Castle Funds is positioned to help mitigate or protect clients in derivatives trading and options and different things. To walk us through exactly again what Castle Funds does in the cryptocurrency space, and then how a passive investor can feel some certainty by having experts like yourself.
So we've got a couple of different strategies that we run. The first is an active strategy that's focused only on Bitcoin, and it uses exchange traded options, futures contracts, to basically reduce it seeks to reduce the risk of a straight Bitcoin investment. So we seek to reduce the volatility of that investment, and we do that in a very secure and, as I said, regulated way. The second is a completely passive index fund, which is designed for people that don't want to disclose to the government that they're investing in crypto, if they don't want to tick the box in the 1040 that says I'm a crypto investor, or people that just want to put a fair amount of money into crypto but don't want to deal with the difficulties and the gates of getting onboarded at someplace like Coinbase or FTX, where you can do $10,000 a day. If you're trying to build $1 million position at $10,000 a day, it gets really expensive and it takes forever. So we've got that in place. And then finally, we're putting in a more diversified index portfolio for people that want to take a broader approach than just Bitcoin. But our investors are coming to us with substantial portfolios in real estate, in private equity, in listed equities, and they're looking at the correlation of Bitcoin to those other asset classes and they're saying, okay, for a very small investment, relative on a percentage basis, very small investment in Bitcoin, sort of 1 to 3%, I can reduce the risk of my portfolio by 10, 15% or more. And so that seems like a reasonable bet for people to be making, and that's what those investors are continuing to do.
Fascinating. Piper, I'm curious, shifting a little bit to like the metaverse, right? And cryptocurrency and real estate. You have this tangible asset like real estate, and you have a cryptocurrency that's not maybe as tangible, and then you have the metaverse, and maybe it's somewhere in between. So how do you see the metaverse playing out with your real estate mind in the next 1, 3, 5 years? Is it what's your take on that?
Wow, yeah. Well, I will say it took me a little bit as a realtor in the real world, to wrap my head around, okay, the real estate in the metaverse. Why would anybody want to pay $2.5 million for a plot of land next to Snoop Dogg? Not to say that Snoop Dogg's great. I just don't know if it's worth $2.5 million of like land that you can't even like park on. So, but once I kind of delved into it a little bit further, yes, there is kind of an opportunity there. People, especially the newer generations, investors, this is like the wave of the future. Just doing business in the metaverse. So I don't care what business you have. Businesses need to have a presence, right? And is it going to be Decentraland 10 years from now? I have no idea. There are going to be new ones popping up all over the place. Right now it's Decentraland, Sandbox, maybe Super World apps, those places. But even a year from now, it could be something completely different. So you just kind of hedge against whatever's coming down the pike. But there's some great articles that I read in Business Insider. People are buying and flipping land, in the metaverse, and it can become a very good opportunity for even like disenfranchised people who might be unemployed or war-torn country. It's for everyone. You don't have to be localized for that. So that's kind of exciting, and just looking at the stats. Beginning of 2021, I believe the average plot of land was about $100. Towards the end of 2021, it's about $15,000. And of course, it's gone down a little bit from there just because of the whole market shift. But there's still really great land out there, and it's still really early. So there's lots of good things that could happen.
It's a great overview, and it helps to make even more sense of this. Dan, I'm curious on your thoughts on the practical application of certain things like Ethereum, right, and certain other coins that maybe aren't as much. But what's your thought on the metaverse, cryptocurrency, on the changing of that as it applies to really anything, investing or to real estate in the next 1 to 3 years?
I think maybe I'm too old. I don't fully understand the whole metaverse thing. I think what I understand is that there are brands and there are people that want to get closer to people who have money to spend, and they want to get closer to those customers in the place where they live. And the last 2 years we've all been living on Zoom, and so we've all made the shift to interacting with pictures on a screen, digital on a screen, right? People are seeking doctor care on medical care. Over telephone videos. So I think the metaverse technology, as you say, is very, very new. I think we're going to learn a lot from it, and we'll be able to apply that to the bigger issues of how do you tokenize a piece of real estate? How do you tokenize other things that have value in the real world? Right? We did we've had the NFT thing, so we know we can tokenize works of art in sort of unique pictures of things. How does that move forward to tokenizing assets in the physical world and then transacting on those? And I think that's an area of payments and complexity that's ripe for disruption. And I think the investments that are being made in the metaverse technologies today are going to help us learn how to transfer that technology. But as far as trading land in the metaverse or anything, it's not really my space.
And as far as investing with Castle Funds, in cryptocurrencies, Bitcoin and Ethereum, I imagine, are the main ones. But is there a certain amount of coins? Are you doing, is there a certain that you focus on, or walk us through just your higher risk ones versus maybe more of your conservative bets,
So
if you will, or investments?
Our two current strategies are exclusively Bitcoin. So we have an active and a passive Bitcoin strategy. The new product we're hoping to launch in the fourth quarter is an index of the top 5 liquid cryptos that excludes stable coins and other sort of non-store of value tokens. But that will be heavily biased to it's weighted to size. It's going to be heavily biased to Bitcoin and Ether as well. So the investors that are approaching us they're looking to take a portfolio approach. They're not looking to pick which is the next coin that's going to moonshot. That's just not what we do. So we're in the sort of index diversification passive investment.
Excellent. We're going to finish with this last question, which is kind of the main theme of tonight's event, which is, what's the top question that someone might be asking, or that you would encourage them to ask if they're going to be investing, like with Castle funds or into Bitcoin exclusively? What's something that's going to help dig out, either the risk tolerance and the investment horizon? Like, how are you helping your clients to make clear decisions on that?
Well, I think it's a great question. I think you've got to look at these things with, first of all, right, there's obviously the potential for some return, but there's a tremendous possibility of loss. This is an incredibly volatile asset class. And so I think you've got to get your head around what is the point of the token or the platform or the strategy, right? These things fall into 3 broad buckets. It's either a store of value like Bitcoin, it's some sort of distributed internet computer like Ethereum, or it's some sort of payment mechanism like Solana, where we can trade NFTs on OpenSea or whatever. And within those 3 contexts, you've got to be able to articulate what this is for. Like, what is the business case of it? And if you can't do that using words that weren't in the dictionary, that were in the dictionary 5 years ago, like if you have to use the word meta to explain the business case, then that goes into the speculative investment bucket. And there's places for speculative investment buckets, right? But if you're looking for, I want to diversify my portfolio and I want to do something a little bit different than in a liquid real estate investment or private equity or something like that, then I think the business cases are there, and then you can make your own determination over whether it makes sense.
Perfect, Dan. Thank you so much. That's I think great wisdom for all of us. Piper, finishing with you. So what's the number one question that you would encourage somebody who's, it could be crypto, it could be real estate, or making decisions in these changing times? How are you helping your clients to make a clear decision and a wise, thoughtful investment?
Yeah, boy, I would say just education is key. There's a lot of bad information out there, just like with just about anything these days. So I would say go to the trusted sources. Don't trust the neighbor gaming kid who's the crypto bro that's like 100% Doge or whatever. Like just do the homework. Know what the top coins are. Learn what these payment processors are actually using. They only transact in certain coins, and there's a reason for that. And as far as real estate, I mean, it is the most stable asset class, and we're lucky in California, it will appreciate over time. That's the whole idea of that anyway. But so if some crypto investors are actually looking to stabilize their assets a little bit better, absolutely put it in. But also know educate themselves on tax implications and what they can do with DSTs and all that. So there's a lot of components there, and I believe it's just good to know a little about each one of them before taking a leap.
Thank you, Piper. And people want to get in touch with you, what's the best place for them to find you?
TheCryptoRealtyGroup.com.
Excellent. And Mr. Dan Hoover, if people want to get in touch with you, what's the best place for them to find you?
We're at castlefunds.com.
Hey, I want to thank you for both being on the panel and appreciate all of your wisdom today.
Thanks so much.